Hey guys, it is Julie here with JT Wealth. In today's video, we're discussing AT&T. We're going to take a look at the recent news for the company and how this is supposed to affect their dividend and if their stock is still going to hold a spot in our dividend-focused portfolio. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we're chatting about AT&T. Now, the company shared some big news over the weekend that is looking like it's going to affect their dividend that they are so well known for. So we're going to take a look at this news and decide whether this stock still has a home in our dividend investing portfolio. That portfolio, of course, is our M1 Finance dividend portfolio, where we are investing $50 every single week to create a nest egg that we can eventually draw $2,000 per month in passive income from. Now, if you need to start your own M1 Finance account, make sure to check out the description down below for a link. Also, don't forget to check out the TipRanks website along with the TipRanks YouTube channel to catch my daily pre-market morning update where I bring you everything you need to know before the market opens. The link to the YouTube channel will be in the description down below as well. So as I mentioned, the AT&T stock is in our dividend portfolio. They pay a pretty high dividend, over 7%, that they are very well known for and have been paying for a long time, as the company is considered a dividend aristocrat. So it did come as fairly shocking news that this dividend could be getting cut in the very near future. Last week, when we shared our dividend portfolio, our AT&T holding was up 25%. Now, if we check in today, we are still up overall, but our AT&T stock gains are now just over 7% versus the 25% a week ago. Taking a look at the T stock, you can see at the beginning of the week that the stock began its downward slide. On May 17th, we were trading up above $32 per share. It then dropped 10% and has gone up slightly today. We're now down about 8% from the start of the week at $29.55 per share. So let's start off with the announcement that caused all of this. That was that AT&T was going to be selling Warner Media, who was going to merge with Discovery, creating a standalone company to form a new global leader in entertainment. This newly formed company, which has yet to be officially named as of right now, will end up becoming the third largest media company behind only Disney and Netflix. In regards to how this whole structure will work, AT&T will be splitting out Time Warner Media, which is going to merge into Discovery. Discovery will be contributing 100% of its business to the transaction and receive 29% of common equity. AT&T will receive $43 billion in a combination of cash, debt securities, and Time Warner Media's retention of certain debt. AT&T shareholders are to receive 71% of common equity distributed via shares of stock. Now, what has people a bit shocked and disappointed, I guess, in AT&T this week is that they announced they would be resetting their dividend as part of this transaction, and it would end up being 40% of their new free cash flow. That free cash flow is expected to be about $20 billion by 2023. So with a 40% payout there, we'd be looking at a total dividend payout of about $8 billion. Now that is nearly half of their current dividend payout of $15 billion. So essentially we'll be cutting their yield in half. This new yield then is expected to be around 3.5% to 4%, which is still a fantastic dividend and is still double the average dividend yield of the S&P 500. So yes, this can be disappointing news for those of us who loved that big dividend. But we can't forget to take a look at the entire picture of the company when reacting to this news. Most importantly, of course, is that the company is going to be $43 billion less in debt. That is a very notable amount. At the end of the first quarter, AT&T's roughly $169 billion of net debt left it with net leverage of 3.1 times adjusted earnings before EBITDA. The company says the Discovery deal will reduce its net leverage to 2.6 times adjusted EBITDA after its close, and it plans to cut down on more debt after that through a combination of EBITDA growth and debt paydown. Although we loved that dividend yield at over 7%, a lot of people were concerned with how stable that was and if they could continue paying that out, as the company was carrying a large amount of debt. Remember, they just purchased Warner Media a few years ago for about $108 billion, and in 2015, before that, they'd purchased DirecTV for over $48 billion. Now, in this last year, we're seeing them get rid of both. This is a big positive, as it's going to allow AT&T to become a more streamlined and focused telecom company. So personally, I think this is going to be a great move for them over the long term. And I think that's the big key word here, is long term. Of course, I'm a longer term focused investor, especially in our dividend portfolio. That is an account that I plan on holding for 20 plus years. So the next year or so could be a bit rough for AT&T, but it just means an opportunity to gather up more shares at those lower prices. Of course, with our M1 Finance account, I do have that weekly buying set up. So I'm really taking advantage of that dollar cost averaging, and hopefully over the next few weeks lowering my cost basis as we get in on some of these dips. Now let's take a look at how some of Wall Street's analysts have reacted to the news. The stock currently comes in as a hold. We have 14 analyst ratings altogether, with 5 buys, 7 holds, and 2 sells. We've had 7 analysts reiterate their price targets within the last few days, and those are definitely mixed. We have a sell rating with a downside of 15% and a buy rating with an upside over 21%. Now that sell rating came from Eric Lubchow at Wells Fargo. And he says that while details on the financial structure remain unclear, reports have suggested the new media conglomerate could be valued at $150 billion. We estimate such a deal would be modestly accretive for T shareholders upfront, with upside optionality down the road if the crown jewel of Warner Media, HBO Max, can scale as expected. More importantly, this transaction would enable T to focus more attention into its core telco segments with wireless and fiber to the home, despite taking away the business segment with the highest growth potential being HBO Max. So he does sound cautious on the profitability of this structure and the concerns of taking away HBO Max from AT&T, but I do agree with him that this is going to allow them to focus on their telco business, which I think is very important. Now, on the flip side, with that buy rating with an upside of 21%, we have analyst David Barden from Bank of America. He stated that in our view, the transaction addresses 5 key weaknesses in the AT&T story, including simplifying a hugely complex equity story, surfacing value in the media business that went unrecognized within AT&T, reducing leverage, shifting the burden of content investment to a dedicated external entity, and allowing AT&T to make additional investments to accelerate growth. And again, I definitely agree with his points there. The deleveraging is huge, and it's going to allow AT&T to shift their focus on investments that can actually help them grow. I think this is the company's way of kind of taking a step back and admitting that maybe those 2 acquisitions over the last 7 years may be a bit of a misstep. So long story short, I am not panicking to sell my AT&T stock just yet. I think there are a lot of positives from this, and they are being dampened a bit by this dividend cut that everybody is focusing on. But we will still be left with a solid dividend and a company that should be better off to support it. So for the long term, I will be continuing with my weekly purchases of the AT&T stock in my dividend portfolio, and I'll be hanging on for the long term. Now, I always love hearing from you guys, so let me know your thoughts. Are you holding AT&T? Does all of this news make you worried, or are you still sticking put for the long term? Please keep in mind, guys, that these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. Always make sure you're making your own investment decisions based on your own research and due diligence. So that is all I have for you on the AT&T stock today. If you made it all the way to the end of today's video, make sure you hit that thumbs up button, leave your thoughts in the comments down below. Don't forget to check out the TipRanks YouTube channel to catch my daily pre-market morning update, where we'll get you up to speed with everything you need to know before the market opens. Thank you guys so much for watching, and we will see you back here next time.